Hello, Forex traders. Hello, Forex traders. How are you doing today? Very much happy to have you guys today for our Traders Focus episode. This is episode 10. I miss you guys. I'm sorry, guys. I've not been updating you. We've been trying to set up some few things, be busy doing other things and all of that. But I made sure that I'm gonna give you guide you what is going on in the market because there is something significant that has happened with what I've been analyzing before now. So there's a change of sentiment, and I want to update you with that. For the fact I've not been doing video because everything I've been analyzing, all the chart has been going to the direction. So you are already guided with what you should be doing. So now there's a change of sentiment, and I feel that it's best I try to update you, try to tell you what you should do right now. You should be doing so you'll be properly guided. So before we move to the nitty-gritty of the day, before we share my screen, please kindly like, subscribe, and please keep sharing this channel with you guys. Share it with your friends, all those who have been struggling in this business. Because here we tell you what it is, and you're giving it out free of charge, free knowledge, free of charge. So keep watching the videos, share this channel, and please like and subscribe. Give it to those who are struggling in this forex business. And I trust me, we're going to make it together. So, guys, I will now be sharing my screen with you guys. Done. Well, you are in. Welcome, Mr. On my screen. This is Living on Forest, Life and Direct, where we tell you the real deal, what going in the market, what going. So today we'll be analyzing some few pairs for you so that you'll be guided with what you should be trading for this week, starting tomorrow, which is 14th April. We want to guide you we should be trading for the week. So now the chart you're looking at is Euro USD. So let's break down Euro USD so that I'll be able to tell you what is going on with this pair. This pair. So let me minimize so that we can get a trend. So right now, if I want to get a trend, I take to the uppermost because of this aggressive move, and this is the topmost part. So I take my trend line and I drop and I try to connect it with all of this. So if you connect it here and here, now even if you connect it here, what we are going to see is going to end up this place. So let's connect it to this place, okay? So that we know that we have the topmost resistance. So I will not be mistaken that the market is trading between a 2 point. We know that the most top resistance is taken out. Then we can confirm something. So right now, in a monthly time frame, we've gotten our trend. The general trend of this market was bearish. That was I've been preaching that the market is going to drop, going to drop, going to drop. The market did drop, however, but not up to the 500 pips we predicted. It gave us some 200 and something pips drop, came to this region, and now it's reversing. So right now, after taking our trend, we've seen this breakout from this trend where for us to confirm, is this really a breakout or a fake out? Some people say, it's just a small breakout. Are we sure it's going to be a fake out? Like I used to tell you, I've told you about how to identify if a breakout is real or a fake out. Go and watch my previous videos. It's here right now, somewhere around there in my channel. Just go scroll, you see it. Then, having done this, we come to the weekly time frame, we look at our supply and demand region. Okay, I usually tell you, you go look at for those important places where you have those aggressive moves. These are the points you should be looking at. Where the market start these aggressive moves and all of that. So if I scroll down here, I take this, I can take here. So let's take here, let's take here because of this point and this point, that is another important zone. I see what's going on anytime the market gets to that point. Market respect. So this is another important zone. Okay, so if we can come to the upside and if we can see any important zone as well, we take. Okay, let's take here because of this resistance. Okay, so we see these are our zones, our major zones. Now, we're not done. We come down to the daily time frame. The daily time frame. So We have this. Now, guys, remember the general trend was bearish, but the market has broken. Now, will you now say that this is a fake out or a breakout? Well, I want to let you know that Euro USD, guys, has officially broken. It has officially reversed. It's no longer on the bearish side, it's now on the bullish side. Why do we say so? Well, we say this because of the behavior. It's just like I usually tell you that when there's a demand for something, the price surge. Let's assume you want to buy a pair of shoes, and this pair of shoes is so important, and when you go to the shop, it's just remaining one of that pair, and somebody buys it for $50. Okay, another person comes, "Hey, and this also pair of shoes, the dealer says there is no longer available. Somebody has buy it." You meet with the person that bought it. "Sir, how much did you buy this?" You say $50. "Ah, I need this shoe badly. Please, can I give you $60 and take it?" Whoa, you that bought it $50, say, somebody's offering me 60. It's a little, it's profit. I can sell. I don't need it. I don't need it that much as bad as this person. Let me sell it for 60. Another guy comes, so you want to take it for 60? I promise my child I'm going to buy this shoe for him. Come what may today. And I need this shoe. Please, you're offering 60, I'm going to offer 70. Give it to me 7. Another guy said, no, 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 I'm going to give you 80. What happens? The price is surging. The price is going high from 50, 60, 70. You see how it's going. It shows that the demand is high. So when you understand that concept, usually the way it happens in the business, day-to-day business, that is how it happens in the forex market. So when people come to the forex market, they forget about what they know about business. They just come and what they see is chart, forgetting that this thing you are seeing here is representation of behavior of buyers and sellers in the market. All this candlestick you see is just the behavior, representation of the behavior in among buyers and sellers. So now when you look at this impulsive move before the market settled down, before the market gave a discount, how was the move? Now, we want to measure that move so that we'll be able to know if this trend, the bullish trend, is still healthy or is fake. This thing I'm showing you is a knowledge that is paid for. I don't usually tell people, I don't usually expose this knowledge for free, but because of the love I have and passion I have for people who wants to make it, I'm giving it out free. So open your eyes, guys. Open your eyes and learn. Now, look at the move from here to here before the market started giving this discount and all of that. Look at the move. This is the move, right? Now let's measure when it starts, when the trend resumes. Okay, so we can see that the market give us that strong move again, equal. But the question is, how fast did it go? The previous one took 1, 2, 3 candles, or maybe these other smaller candles. Let's say 4 candles to make this move from this entire move from here to here. It took like 4 candles. But how many candles did it take to make this equal move that it made here? 2 candles. So doesn't that show the demand is high? Within a short period of time, the price is surging up to what it was before it started moving. So guys, that should tell you that there is a demand of this. People want to buy. People want to ride this trend to the upside. So as a trader, what should come to your mind when you see this? This Euro USD has officially broken. Get it here direct from living on Forex. Euro USD have broken. So as a trader, what should we be doing? With our sentiment has changed from the bearish side to the bullish side, we'll be looking at buys. But should we start putting the trigger on buys, guys? Should we start buying immediately? The answer is no. What should we wait? Remember, there is a little bit of rejection here. So this shows that the market is going to still drop. Probably the market is coming to test liquidity at this area. So the market is coming close to this environment to gather liquidity before surging to the upside. Okay, that is what we are expecting the market to do. And remember, this region between the trend line and the resistance that has become support now, the market is coming there to test liquidity. So come this week, we will be expecting the market to drop before buying. Okay, but Euro USD have officially reversed. It's now on the buy. So those of you who are selling, be careful. Only sells at a short period of time for those who know how to counter trade. but we know that this market has blown up. So can we get any, okay, on a daily time frame, let's see if we can get any other region so that we'll be able to know what's popping, what are going with this guy. Okay, so this is a small region on a daily time frame. So I just put this red bar here so that, okay, now let's look at what happened in that region. So guys, you watch, the market exactly respected that environment. You see, market came there, came shy of that region and is respecting. Well, we're not going to say that the market wants to sell, but rather the market, anytime the market gets to important zones like this, it will respect it a little bit to tell you, okay, we're done before it goes out to gather momentum, to gather more liquidity, to blow up if it wants to break that region. That's what's going to happen. So we are coming this week. We will be expecting Euro USD to come here, touch this region, and then blow up to the upside. That is what Euro USD we are expecting. So if this refuses to happen, we are not trading. Don't pull your trigger anytime. So we can now see already in 4 hours chart, the market came close to that region, tested it a little bit, rejected off of it, and is popping up before the market closed. So guys, we will still wait. Open market on Monday, the market might still come down a little bit because this is just a first impulsive move, and then the market gave us a discount. And if the discount is not much, the buyers will want more discount to this area before they buy. So if you look at your FIB, for those of you who are using FIB, it's not even up to 50%. That discount is not more. So if somebody, they are selling a goods for $100 and then they give you a discount of $10, is it really much of a discount? So you who is buying, if you are buying that goods, how much discount will you want? That should also guide you when you want to trade this in. What are the discounts that came in? Look at the move started from here and pull up, and then the discount is not that much. So that should tell you that more discount might come in. So come this Monday, don't trade. I'm giving you this thing, a real stuff. This is real stuff. Real stuff I'm giving you. Advanced knowledge. Take it for free. It's my way of giving back to the society. Now, how much of a discount would you want for a goose? A lot of people would appreciate more discount. More discount means more profit for you. So the market has come and gives you the rejection and going back up. It came back and then it's going back. Wait. So if how we prefer to trade this pair, how I'm going to prefer trading this pair is like this. The market opens on Monday, comes here, comes here, comes here. Give me something like this. And then as it's coming back to take up this region, that is where I should keep pulling my trigger because that discount is good enough and that is almost like 50% retracement. At least if they give you 50%, wow, every buyer, once they see a goose from $100 and the discount is giving Black Friday, 50% slash, everybody will want to jump in on that because it's a reasonable discount to give. So, but 10%, 5% is not much of a discount. But because what happens in Forex is induction. They will have to induce, for the market to go up, there must be buyers, people who are willing to buy. And if people are not ready to pay on a high price, because the price is already high, the market will not go up. But the dealer is going to, for the dealer to sell, to make sales, the dealer has to give a discount. So we are waiting for that discount. And the discount has to be reasonable to induce buyers to come in again. So this discount, I know is shy of that region, but then we want to watch and see. But however, everything in Forex is possible though. It's not 100% certainty. But I'm just telling you what I know that is likely to happen because of the behavior of buyers and sellers in every business. But if the market does not come here and give up entry, don't cry. Wait for you to break this region. Once you break this region, we are buying. Wait for a retest and then we pull up. So this is the two environments we are looking at. So guys, thank you. This is for Euro USD. So I've been able to guide you what you should be trading. Buy Euro USD, but wait for the market to come back to this environment, this region, Market gives us more discount, and then comes and it's coming back. This is when you should be pulling your trigger. This is the kind of behavior I'm expecting to look at. Discount, more discount, and then a little bit of consolidation in that price. And then as it's pulling back, then that is when I should be looking at buying. Okay. So Euro USD, we are looking at buying. Now, GBP NZD. Okay, I will just talk to you a little bit about the GBP NZD. Now, if you look at this pair, it's a bullish pair for a long period of time. But from what I am seeing, guys, the market is coming back aggressively. And if you look at, if you go to the line chart, you will see that it has formed an M formation on a lower time, on a daily time frame. This is a clear M formation, double top. And the weekly time frame is a strong engulfing bar into the support region. So I'm looking at the possibility that this pair come this week is likely to break this environment to the downside. And if it breaks this environment, we know that we have over, I think, 500 pips or 1,000 pips. Let's see. Okay, we have around the 400 pips drop. 400 pips between this region and this region, because it might come back to test this place, this environment, before going back up. So we know that if it breaks here, we know that we have a 400 pips potential sell. So what come this week, the market might to behave like this. Come here, go to this environment before selling, before the market shops. So the market might come here, touch this environment before selling. And if that happens, then we know that we have over 500 pips drop from this pair before any bullish move resumes. So for this one, GBP NZD, for those of you who were wait for the market to break here before anything trigger, but then I'm not going to trade on this pair. The next pair I'm going to go tell you directly is gold. Though I've done the analysis, I'm done with the analysis, but then gold is continuing to trade on the high side, on the high side, on the high side. So this is our resistance, the previous high, aggressive. Look at the aggressive move gold is making. It shows that this trend is still healthy. Look at the move it made from the previous move. Look at the small candle. It's not that aggressive. Look at this three candle is not that as strong as this. So it shows that this trend is still healthy. The trend is healthy. So gold is still on a buy side. On a buy side, guys. So just wait for the market to come back to test this region before buying. Simple as that. That is just what you need trading gold. There's no hard and fast rule about it. Wait for the market to retest this environment, come back to retest this environment and give you a bullish signal. That is when you should be pulling your trigger. So that is that for gold. Wait for the market to come back to 3160.35 region. That is when you should be. Now, why do we say, what confirms the fact that we say Euro USD have reversed? I told you that DSY, dollar index, is the inverse of Euro USD. So if Euro USD is buying, dollar index should be selling. If dollar index is buying, Euro USD should be selling. Are we together? So it's inverse of Euro USD. And if you watch the resistance, the support has broken, and now support becomes resistant. So the market still shows that this young man is still coming down, and coming down to where, to another important zone, which is very, very far from here. So we know that the sales will happen for a long time. So USD shows that USD is becoming weak. USD is becoming weak. So that confirms Euro USD. Now we want to go to another pair. Well, let's see JPY pairs and see if we can get any useful thing out of them. Okay, let's see if we can get a trend. The market has been pulling down. Okay, this head and shoulder, very, 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 very nice, very nice. So come here, we have a zone, an important zone for that matter. Okay, so let's go to the weekly time frame. So Euro JPY is still a sell pair. It's still on the sell side. Okay, just that the market has been doing some. This is and this. Okay, this entire region, this entire region, and this is the head. So this is head and shoulders structure, and this is the neckline of the structure. The market has refused to break the neckline. So what we are waiting for is come this week. We're waiting for the market to come back to this shoulder region, this region. So let me use this stuff for this important. So this is where we are waiting for the market to come. So wait for the market to come this and gives you a rejection again, then we're going to shut it down. You know, JPY pairs are strong and euro is strong. That is why you're seeing this sideways movement. But generally, this pair is a sell pair because it has given us a structure, a very important structure on a higher time frame, shows that the market is going to drop. But when will it happen? We do not know. Because right now, euro is strong, JPY is strong. That is why we are seeing this a lot of this consolidation. But if you look at the pair that is paired, JPY that is paired with another weaker pair, you see that the trend is very clear. The same thing is happening. The same thing is happening in GBP JPY. If you go to a weekly time frame, okay, okay, so